talked about the Federal Reserve, and I mentioned just briefly about some things that happen to help us protect the banks so the banks don't close up and take all our money away from us. So here is the banking system. If you look on some of the setup that we have right now, you'll see these are some of the giant banks that we have. JP Morgan is by far the biggest. Okay, then you have Bank of America, Citigroup, Wells Fargo. They're enormous and they play a huge role in our economy. You generally have three different types of banking systems in place here in the United States. You need to know them because you too can save an awful lot of money if you know some of the simplicity part about what they are. You also have another group out there called non-banks, which are kind of like financial institutions. You have to be careful because a lot of them they can be a fly-by-night operation, and unfortunately, you could be that fly that they take away in the process. So be careful, and that we'll talk about that in just a little bit. Commercial banks. Businesses use commercial banks. That's really what they're for. They have two types of customers, depositors and borrowers. You go in, and a lot of times they want you to have a certain threshold. Otherwise, they're going to charge you for every single thing that happens. Oh, we have this over, we had to buy extra toilet paper for the restroom. So therefore, we're going to charge you 25 cents for that. But I didn't use the restroom. Doesn't you'll have all kinds of different things. So be careful on commercial banks. They're out to get profit. They are a profit-centered organization. I recommend that you keep all of your money in a different type of institution. I'll mention it in a little bit. But for the most part, commercial banks, they're all about business. They're really a corporation. They'll have checking accounts and savings accounts. They use those funds to make loans. And what you're looking for a lot of times in a bank, you'll have different levels. We want instantaneous because we're Americans. So we want everything on our phone. We want snap, snap, snap. 95% of all transactions are digital nowadays. Only 5% really take place inside of a bank. 93% of all transactions are outside of a bank. Only 7% are in the lobby itself. So that being said, sometimes a lot of banks have closed a lot of physical facilities simply because people don't use them. They're using their cell phones to do the bulk of their transactions. So we want mobility as a big thing. In the banks, you have a demand deposit. Another word for this called a checking account. Okay, and you can withdraw money anytime and from a check, and that check is somebody demanding money. So when you write somebody a check, technically the term is you're writing a demand deposit, giving them the right to demand that money be transferred out of your account into theirs. So the money is coming out of your account being deposited in theirs. You also have a time deposit, which is a savings account, and sometimes it just depends how on the bank. But you can sit down and put your money in; they'll pay you 5% annual interest on the money you have in there. And it might be a matter of there could be a requirement you have to keep it there for 3 months, a year, 5 years. It just depends what it is. Okay, depends what that is. So that you have that for a CD and a time deposit, just a regular checking account. So it depends what you have. A lot of times, if you have your money in the bank, you'll have a checking account where you write demand deposits. You'll have a time deposit, which is a savings account. You can have different aspects. The bank can require notice before you draw money. It's always kind of a freaky thing. It's my money and have to tell you I'm going to withdraw my money. Anyway, and then you have the CD. You're going to have a 5-year CD or a 1-year CD or 6-month CD in the process. So different aspects of it. The piggy banks versus the bank. Sometimes we actually had negative interest rates for a while in Europe and Japan. It's kind of an interesting aspect of it. So number one is commercial banks. Okay. Number two, savings and loans. They accept savings and checking, and they really specify on home mortgage loans. That's their specialty. So you want to have, if you're going to be thinking about buying a home, you want to look for savings and loan. We call them an S&L. Another term I want you to know, we call them thrifts. There's three different terms we have for savings and loans. One is savings and loans, or S&Ls for saving and loans, and also a thrift institution because people put money into them instead of a bank to sit down and start saving for a home to actually sit down and buy a house. So that is their main function. And the original purpose was to promote thrift and have home ownership. It's a smart move to put your money there as well. It just depends where you're at. So if you work at a large bank, you open accounts for customers, and your manager suggests you open a savings account for customers. You can add another account as a credit card without even being aware of it. You get a larger commission. Guess what? That happened at one of the world's largest banks, one of the ones I showed you, and they had a huge scam out there. So you'll see that happening. So be careful about the banks. There are some banks that ethics have gone out the window, and so they were fined millions of dollars to do that in the process. And also, people had credit cards and never knew about them. So this is a matter of ethical decisions. Somebody certainly wasn't ethical and they got fired, but nobody went to jail over it just because they was convicted of millions of dollars of fraud. No big deal. Anyway, credit unions, they're nonprofit, member-owned financial cooperatives. They have a whole series of banking services. They do not loan money for businesses. So if you're going to do a home improvement and you got a credit union account, it's a good place to go to. You want to buy a car, this is a good place to go to. They don't charge for an awful lot of services that you're going to be charged for at a commercial bank. So now you have three different types of things. One is a commercial bank, which is primarily for businesses. Okay, you can also put your money in there, but really the focus is business, and they're going to charge you fees for all kinds of different activities that you do and almost everything in the process. Savings and loans, or S&Ls or thrifts, all the same thing. Those are places you go to get mortgages. And if you're thinking about buying a house, it's a good idea to put your money into an S&L, and that way you have a relationship going with a place you're going to eventually go to get your mortgage from. Credit unions, I recommend everybody join a credit union. They're nonprofit, member owned. I've been on a board or two of credit unions. I recommend them. I think it's a smart move. I think the aspect of trying to deal with your members is a big deal. And also the fact you can vote for the board in the process as well. So the banking system has those three. And then you have this group out there we call non-banks. Okay, they don't accept deposits, but they have a lot of services by regular banks. Life insurance companies do a lot, pension funds. You're putting money aside for different things. Brokerage firms, they're not banks, but they deal a lot with different financial transactions, and they have different sets of laws that deal with them. Most of them do not have the actual insured accounts there, but they really are a huge amount of financial assets. A pension fund, when you have the pension fund, the teachers retirement system here in California, when they weigh in as a pension fund or CalPERS, you'll see these giant pension funds come weighing into the stock market and bond market. They are big players and they play a huge impact in a lot of things. And there's a good place to sit down. If you have a pension, you can actually borrow money on your pension sometimes, it depends how it's set up. So know about the three different kinds: commercial banks, savings and loans, credit unions, non-banks, and also what a demand deposit is, which is a check from your checking account. The banking system. Take care.